Well, ladies and gentlemen, just like that, the stock market is back in the green. It's currently about 10 a.m. on the East Coast, and we have the S&P 500 up 2.1%, the Dow's up 1.9%, the Russell's up 2.3%, and we have the NASDAQ up 2.5% as the VIX is down over 7%, and we have gold down 2.3% and silver down about 1.8%. So in this video, we got to break down some stocks, we got to break down some charts, and we have to go over earnings reports and what I'm looking to do in these markets. So sit back, relax, take a sip of your coffee, make sure to get your 5 stocks from Moomoo, each of which could be valued up to $3,500 with a $100 deposit, and on top of that you get a free share of NEO guaranteed, which at this point in time NEO is right around, let's see here, almost $20 a share. NEO's up 7%. So if you want some free money, use that link and let's get right into the video. So what you guys are noticing here on SPY is that it's testing, well, I guess it's above the 50 moving average now on the 10-day chart, but it's now testing the 180 moving average and the resistance of this downtrend. You guys can see, and this downtrend, by the way, has been intact since the beginning of March, where we hit 441. The next day we hit about 435, followed by 432. So we've been making these lower highs, but we haven't gone much under 410, so we're seeing a bit of a descending triangle, if you will, here on the 10-day, 30-minute chart. So I'm looking at this like, okay, if SPY breaks out of 427, and I'm going to put my alert right there right now, that is where we could see an even bigger reversal. I mean, that's just the bottom line. Right now, we're trading a little bit under 426, so if we start cracking above 427, and especially into the 430 level, I mean, that's going to be very bullish. And look at this. Another thing worth mentioning is SPY is now testing the highs from yesterday being around 427. Again, this is a very, very critical level of resistance now. It was support, but now it's resistance since we broke under it yesterday. So if we fail at 427, guys, you bet your you-know-what, we're probably going to go back down to test the lows from yesterday, 413, 415. But if we crack above 427, next point we can go to on SPY here is 432, which was the high point from 2 days ago. And if 432 breaks, we're talking maybe a relief rally that could extend up to about 438, which is right by this 180 moving average on the 4-hour chart. And if I pull up triple Q, which you guys at this point should know tracks the NASDAQ 100, you guys can see the same thing. We're seeing a bit of a relief rally above 320, which is great. It's now trading above the 50 moving average on this 20-day chart. And if I pull up the 10-day chart, you guys can see it's actually above both moving averages. And we're trying to break out of the high from yesterday, the intraday high from yesterday, which was at about 332. That's literally where we're testing right now in real time. So if 332 breaks on triple Q, 338 is next, and if that point breaks, and mind you, 338 was the high from the 7th, so 2 days ago on Monday, if 332 breaks, there's even more upside, probably towards mid-high 340s in the very, very, very short term. So I'm not all of a sudden an ultra bull in this market, because overall we're still in a directional downtrend, but I'm just watching this as a relief rally, and I want to see if this relief rally has more legs to it, or more upside, if you will, from where we are right now, as we do see a lot of individual stocks up a ton, and we will break some of these stocks down in this video. So what do you guys think? Drop me a comment. Let me know your thoughts. Hit the like button if you haven't done so already. And let's talk about some of these stocks today. We had Zim Integrated Shipping Services, which this stock, guys, you know, I made a video on it a couple months ago. I'm not sure if you caught that. Maybe you did, maybe you didn't. But this is really doing well, as we're seeing, the supply chain problems. And this has been the story, right? This company pays a ridiculous dividend. And I made a video, like I said, and in that video I mentioned this is probably a short-term thing with this company. With the whole supply chain, shipping problem we're seeing right now. This is a short-term pop, but nonetheless, it's doing very well in the short term. Now, will it continue on this path for the next 5-10 years? I highly doubt it. I think this is it's cyclical. It's going to come down in the next couple of months, maybe a year or two. Who knows the timing? But overall, right now, they're crushing it. They reported earnings this morning. EPS came in at $14.17 versus $13.20 estimated, so they crushed EPS, and revenue crushed $3.47 billion versus $3.34 billion estimated. And on top of that, get this, guys, this blew my mind. I'm not going to lie. They declared a $17 per share dividend, and before that, it was $10. So we're talking a $17 dividend, guys. We're talking a 70% increase in their dividend, which means now what? What's their dividend yield? What is it? What's 76 divided by 17, guys, or 17 rather divided by 76 times 100? That would be the dividend yield, which I might as well do that now. 17 divided by 76 equals times 100. Their dividend is now a 22% yield, guys, which, let's just be honest. Let's not sugarcoat this. Let's not beat around the bush. This is not sustainable. It's just not. It's a short-term thing, which, again, we're going through a crisis right now. This company is benefiting, but the second these EPS numbers, the revenue numbers start to decline quarter after quarter, I guarantee you guys this dividend is going to get slashed. And whenever I see a dividend over 7, 8%, 10%, red flags start to go off in my head. And when I see a dividend above 15, 20%, that's just a no-go for me. I'm just not even going to consider it. Sure, we could dive into it, buy it, and get some nice payments for the next couple quarters. But when the music stops, when the party's over, this thing's going to tank, and I don't want to be in it. I don't want to be holding the bag. And I could be wrong. I could be off base with this. Let me know in the comments. But those are some thoughts. Keeping it real here on ZIM. But for the short term, it's still crushing it. Earnings are great. Revenue EPS guidance for 22 is looking pretty good. That's EBITDA. 7.1 to 7.5 billion versus 6.19 billion estimated. So, the guidance is good. Dividend's good. The trend is nice. And I always say, don't fight the trend. But for me, I'm just being cautious with it. Another one that reported earnings this morning is Oatly, ticker symbol OTLY. This is up 4.3% right now. They did Q4 revenue of $185.9 million versus $178 million estimated. So nice beat on revenue. EPS missed, though, negative 13 cents versus negative 9 cents. So that missed. And they see full year 22 revenue of $880 million to about $920 million. Versus $988 million estimated. So Q4, or rather full year 22 revenue is under the guidance by about $100 million, which is not good, but they beat Q4 revenue and they missed Q4 EPS. So this stock will probably continue the downtrend. I'm not going to say for sure that's going to happen, but there's no way. Oh, I just got a text. Hold up. Anyway. There's no way that this is going to reverse trend after that report. There's just no way. And I mean, this stock is down from $26 to $5. It is down 80%. So I'm going to just set my alert at $8 and just forget about it. If it starts breaking trend, that's going to be great, but I highly doubt it. So at least in the short term, by the looks of it. So another one that I'm looking at here is Campbell Soup, CPB. This one up 2.6, or it is up 2.6% on the day right now. And they reported earnings as well. Q2 EPS of 69 cents, which came in line with the estimates. Revenue of $2.21 billion versus $2.24 billion estimated. So inline EPS, they missed revenue. They see full year 22 adjusted EPS of $2.75 to $2.85 versus $2.79 estimated, which is not too bad. So I'm not going to say it's a great quarter for CPB based on those numbers, but I'm not going to say it's a bad one either. Bad earnings report. It's kind of right in the middle, and the stock initially was down. If you guys were watching it, you probably saw that. It went down to about $41.50. Now it's trading at $43.50, so it is up about 4.5%, from that pre-market low to where we are right now, which is not too bad. And by the looks of it on this 4-hour chart, let me show you this. it's holding the uptrend. It's been reversing these past couple of months. We got a golden cross, and with this earnings report, and I think yesterday the stock went down. Let me double check. Yeah, look at that, guys. The stock got destroyed yesterday. It went down 7%. So with this pullback, now we got the earnings. We're trading under the moving averages on the 4-hour chart, but I'm telling you, if we fight back over, let's say, I'm going to say 44, 50, 45, if that happens, I mean, this could see a huge run to about back to, let's say, 47, and I'm saying huge like it's going to be a 50% move. I mean, it's not going to be that big. It's not a GameStop or an AMC or some of these meme stocks that we sometimes talk about, but it's a respectable move. 44.50 to 47, that could be anywhere from 3 to 4% upside. If 47 breaks, where I have another alert, and I think we talked about this recently, 47 breaks, this could be back to the 50s. I think that's definitely possible. So watch out for CPB. Looks decent with the technicals when it comes to technicals. We also had Express report this morning, which is a teeny tiny stock. I mean, $4 stock, you might as well call it a penny stock. They did EPS of 11 cents, which surprised considering the estimate was negative 2 cents. So they beat EPS. Revenue also beat $595 million versus $591.95 million estimated. So nice double beat for Express. And get this, guys, Q4 same store sales were up 43% year over year. And that's clearly because of COVID, right? And they're still up compared to 2019, which I guess is good. They're up 4% from the pre-COVID levels. So that's good. And what we're noticing on Express here is the fact that it's been reversing the past couple of weeks out of the downtrend that it was in for months. We're talking from June, July, August, up until literally a month ago. It was downtrending. Now it's back above the moving averages. We're noticing a golden cross, and buyers stepped in right around 370, right by that 180 moving average. Now we're back over $4, and we're pushing up 4% on the day. So I'm going to put my alert right now, and you guys are noticing a bit of a struggle at 450. So I'm going to put my alert at 450 and watch it from there. If that point breaks, we're talking a push towards $5 plus. It's definitely in the cards. So actually, now that I think about it, let me do two alerts. I have one at $4.50. Let me do another one at $5. We'll see what it does from there. And the last one I want to look at is AXP. AXP's up 5% on the day today. It's up over $168. And we've mentioned this before, but I want to mention it again because it's up, like I said, 5% on the day, showing signs of momentum above the bottom of this uptrending channel, which buyers now seem to be stepping in right around 158, 160, 65, which is great. Now I want to see a break above $170. If we start breaking 170, this could make a move towards the moving averages on the 4-hour chart, which right now are right around $180. So I think a 10-point window is very possible for us to catch a move within, from $170 to $180. And if these moving averages break, which we're not there yet, I don't want to get ahead of ourselves, but if they do break, we could see an even bigger push, maybe towards mid 180s, high 180s, who knows, right? So I'm watching these stocks, guys, and again, today we have a lot of green out there. Pretty much everything on my watch list is green other than Intel, XLE, which oil's selling off right now, and AG, which is a silver stock, mining stock. Other than those, everything across the board is green. We have Coinbase up 10%, Square's up 8%, Smith & Wesson's up, Nike, Voyager, Palantir, Snap, Las Vegas Sands, JD, everything is green. And I'm not too convinced it's going to last, but it's just what we're seeing right now. And we'll make more videos going over, how the market progresses throughout the day. And yeah, that's it. I'll wrap it up here. I hope you all enjoyed it. If you did, hit the like button, subscribe if I do upload this on YouTube, and make sure to get your 5 stocks from Moomoo. Use my link, deposit $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. And on top of that, if you use my link and deposit $100, you get a guaranteed free share of NEO. Use the link. I'll catch you guys in the next video. Peace out.